All right, welcome out to Tackle Trading 101 here tonight on Monday. It is a pleasure of mine to have the amazing Coach Frank with me here tonight. And Coach Frank is going to talk to you guys about what he likes about the breakout, the different types of technical setups. He's going to go through some case studies. We're going to have some fun with old Coach Frank here in just a moment. But before we do that, guys, for those of you who are not part of our community at Tackle Trading, this is a great opportunity to become a part of the pro membership of Tackle Trading. You can always go over there and get a discount, not discount, but a free trial on the pro membership simply by signing up. And you get awesome content. You get a great community, you get access to Discord, all of our scatter reports, our newsletter, our litany of different webinars we do for our pro member community. Our pro members know how we get down. But once again, you can always just go over there and sign up. And one thing we are now doing is also, we have an online basic training for newer traders called the Option Success class. That is included with any pro membership as well. So you also get access to an amazing live course to put your foundation from an educational perspective. Our next class, next Monday and Tuesday, actually, myself, Coach Gino Poor, we're going to be teaching that class. If you need more information about that, you can always hit us up at team@tackletrain.com. But with that said, sign up for a pro membership, become part of the community. It's an amazing, amazing community. And if you need to talk to one of my coaches, Coach Sylvia is available for anybody that needs to set up a consultation and talk about what their needs are from both a trading perspective, an educational perspective, or just to kind of get some help with some one-on-one assistance from one of the amazing tackle coaches. You can do that at tackletrain.com/schedule-consultation. And with that said, what we are here tonight to talk about is the bullish breakout, bearish breakdown. The breakout king himself is here, Coach Frank Martin, and I don't think there's ever been a breakout that he was not willing to trade. He loves the breakout. It's his favorite technical pattern, and quite frankly, Frank, say that 10 times in a row. Quite frankly, Frank, ever since you and I have known each other, we've been very consistent with one another from a technical perspective. But over the last 2 to 3 years, I'm going to tell you right now, I've probably got to the point where the bullish breakout is one of my favorite technical formations as well. And that's what we're going to be talking about here tonight. We're also going to be talking about how Frank developed some rules that he likes to navigate with the bullish breakout and bearish breakdown. And then he's going to finish on a breakout case study. So with that said, ladies and gentlemen, welcome Coach Frank out. Coach Frank, go ahead and take it away, my friend. You got to share your mic there, Frankie.
I just somehow keep hitting the wrong button on my mic. It's just one of those things. Well, I appreciate that, Maddie, and excited to be talking breakouts with the team. You nailed it. Breakouts are my favorite pattern. I almost turn everything into a breakout, right? Whether it's a king's bed or a high base. I love breakouts. And there's a couple of reasons why, and I hope to explain them with you here this evening. So I'm going to go ahead and make this a little bit bigger so we can kind of see it here. When it comes to trading breakouts, first off, what are they, right? I think we all understand kind of conceptually what it is. It's just something that's breaking through a level of resistance or support, right? If a stock keeps hitting its head at the same price level and get knocked down and get knocked down and get knocked down, when it finally pushes through, that's going to be a show of strength and something that's definitely going to catch my attention. And on the other side, if it keeps bumping into the same level of support and bouncing, but no real follow through, bouncing, no real follow through, when it finally breaks that support level, that breakdown is definitely going to catch my attention. So really, if you keep it super simple, whenever we break resistance, we've got a breakout. Whenever we break support, we have a breakdown. But of course, we're going to do better than that, right? We want to qualify our patterns a little bit more than just saying, hey, it broke, right? So we're going to talk a little bit about that here tonight. The thing I love about trading breakouts, first and foremost, is they're easy to identify. It's really clear to me that this is a breakout candidate or it isn't. Because if it's a messy chart and I don't know what to make of it, I'm just going to be leaving it alone. Right, breakouts have clear levels of support or resistance that I can start building and prepping a trade around, which saves a ton of time just looking at a chart. Whenever I look at a chart, I want to come up with a trade, right? That's kind of my nature. that's a lot of time that I waste if I'm not careful. So breakouts, because they're easy to identify, especially once we get into the habit of looking for certain things, they become very time efficient, at least for me. On another reason why I really like trading these breakouts is we're kind of coming in as a team, right? So if a stock keeps hitting resistance, it keeps hitting $50 and it gets knocked back down to 45, goes back to 50, gets knocked back down to 46, goes back up to 50, gets knocked back to 45. We can see where all of those sellers are coming in at that $50 mark, right? Everybody can, not just me, not just you, everybody who's following that stock can see that. And so what is it going to take to get through that $50 mark that's knocked us down time and time and time again? It's going to take some buyers. I'm not going to buy it when it's right at $50 because history says it's going to go back down, right? That's going to take some real money and some real momentum to get through that resistance level. So when I'm trading breakouts, I'm trading into that momentum. I've got friends, if you will, joining the fray. And on the other side of it, any technical, anybody on the other side, anybody who maybe was selling or shorting at $50, well, they kind of got it figured out. Well, we sell it at 50, we put our stop at 51 or whatever, because that keeps making us money. It went from 50 to 45, 50 to 46, 50 to 45. They try it again the fourth time. If it pushes through 50, they're likely hitting their stop loss and kind of clearing out and getting out of my way, right? So I really like kind of the one-sided feel that for me, that it has on breakouts. And those are the two big reasons I think one wants to trade breakouts. You're going to have different types of breakouts. You're going to have continuation breakouts. These are going to be things like our high bases. The stock's in a nice upward trend above the 90 MA for an extended period of time, and just kind of go sideways up at the top, not really doing anything, right? A high base, an ascending triangle, a cup and handle, very similar type of patterns where we expect once we do break through resistance, we're going to continue the overall trend that the stock is on, whether that's a bullish or bearish side of things. Then you're going to have your reversals, right? Our good old fashioned double bottoms, our double tops, our head and shoulders type of patterns that kind of are saying, hey, this trend, it might be over. We might be heading the other direction. Some of my favorite breakout patterns are those nice W type of patterns that develop after a stock has sold off some. And then you're going to have kind of your consolidation patterns where you're going to have things like your symmetrical triangle and your rectangles that really is just, hey, as soon as it breaks whichever way, whether it breaks to the upside for a bullish breakout or breaks to the downside for a bearish breakdown, that's the signal that I'm going to be looking for. So you're going to have different types of breakouts that, of course, you want to be tracking, because likely some are going to be more successful for you than others. And the best way that we're going to be able to differentiate is to make sure we're keeping good notes, right? And so every time, I always tell people, name your trades. Say, this is a high base, this is a symmetrical triangle, this is a cup and handle. So you can evaluate apples to apples, if you will. I'd put my artistic talents to the test. Everybody here at Tackle Trading knows what an artist I am, right? And so not the greatest artist in the world, but just to give a quick visual of what an ascending triangle is going to look like, what a high base is going to look like, what a cup and handle. These are our continuation patterns. Our reversals, our W patterns, right? Looks like a W. W for winners is what I was taught. Our head and shoulders, where we had a breakdown, but it fired back up, created a shoulder, and got another breakout candidate on our side. Our triple or more, multiple bottom levels of support or resistance. Lots of nice bullish breakout candidates, right? And on the flip side, you're going to have the bearish equivalent for all of them, whether it's a descending triangle, a low base, an inverted cup and handle, a double top or an M pattern, inverted head and shoulders, the triple top, right? So you're going to have all of these for both bulls and the bears. Another thing I love about breakouts is they're very similar, right? Whether I'm trading up or down, then you're going to have your consolidation. This would be our range. I got a really good example to show you here in a little bit of somebody who's basically stuck in a range for an extended period of time, a clear level of resistance at the top, a clear level of support at the bottom. Hey, folks might be playing within that range, but the signal and the breakout is going to be when we come out of that range, whichever way it ultimately ends up being. And then you're going to have your triangles. I know not everybody's a huge fan of triangles. I like triangle patterns, your symmetrical triangles, where you are making higher lows, but you're also making lower highs. And something's eventually going to have to give. If that continues, sooner or later, it ends up in the same place and we break one way or the other. And that is going to be our signal. So just a quick visual of what some of those are going to look like. Once we have the identification done, and that's not really the hard part. That just takes practice and training, really. Once you know what you're looking for on any type of a chart pattern, it'll start to stand out for you, right? It maybe doesn't start that way, but if you're looking and practicing, you are going to get really good at identifying those things. I have no doubt about it. That is not the hard part. The hard part is creating our rules of how we navigate these things, right? How do you play a cup and handle? It might be a little different than how I play a cup and handle, right? So we're going to talk a little bit about rules. Again, kind of the one thing that we're all going to have in common on a breakout or a breakdown is our signal is going to be when it breaks that support or resistance level, right? So if we're looking at a cup and handle pattern, waiting for it to break out, it's not a breakout until it's broke out. It's a breakout candidate until it's broke out, right? So we're all going to agree that it needs to break the resistance. Where we're going to disagree, and that's okay, is on what that clearly means, right? So I've thrown together some very, I think, a really good starting point. If you're struggling with rules for your breakout trades, I kind of put together what I kind of see as a good place to start. That's probably not where you end, but maybe can give you a little bit of a place to start. We're going to have our aggressive entries. That might be 10% of a daily ATR, average to range, above that resistance level or below that support level. That's pretty aggressive, and you're likely to run into a lot of stop out issues with that type of methodology. On the other side, though, you're always getting in a really good price, and when it does run, you kind of are there at the ground floor, right? So that's the upside and the downside to that. If that's a little too aggressive, maybe 25% of an ATR above that resistance or below that support level, that's going to give me a little bit better confirmation, still give me a lot of control on how I'm setting up my trade. Not quite as aggressive. I call that one moderately aggressive. Then I'm going to have the 50% of an ATR above that resistance or below that support level. That's going to be, again, the more confirmation we pay for, the more likely it is to work out, right? But we're paying a higher price or a lower price if we're on a bear breakdown for that confirmation. If you're using a percentage of the ATR, where, whether it's one of these numbers or something else altogether, one of the real benefits to that methodology is you have a lot of control. If we've got that $50 breakout that we were, using as our example earlier, and we said, I want to get into this thing if and when it breaks $50, well, we can go in and do the math, right? What's its ATR? Its ATR is $3. Okay, well, 10% of that or 25% of that, we can actually get that order set up, and hey, it'll happen or it won't, right? So we have a lot of control if we're using that type of a methodology. On the other side of it, if we're not getting as much, right? Because one thing I've learned as a trader over the years is the close, whether we're talking about above resistance, below support, using moving averages, a close is always better confirmation than a breach, right? And so, of course, it is. And so if we want to be a little bit more conservative, we might actually wait for a close. Let's close above that $50 level. Then let's build our trade above that closing candlestick's high by, again, 10% of an ATR, 25% of an ATR, whatever your individual role might be. That's going to give us, in my opinion, at least, much better confirmation. A close is much stronger, in my humble opinion, than a breach of resistance or support. It always has been, and I believe that it always will be. We give up control, though, right? I can't go set up my order like somebody who's using a percentage of an ATR rule to get in, because I don't know where to set it up, right? I'm going to have to wait for that close, simply meaning sometimes it's going to leave the station without me. Sometimes I'm going to miss out on a run, because if it closes at $52 tomorrow and the high of the day is $52.35, all of a sudden I'm feeling like I'm not getting a very good entry, right? So I'm giving up control for that better confirmation. If I'm being honest with you, I firmly don't think it matters which methodology an individual trader uses. I really don't. I think if you use that methodology 100 times on 100 quality breakout candidates, the good, the bad is going to come, and it's going to be about even, right? And so it's a lot more, in my mind, about comfort, right? If you're using a 10% of a daily ATR above resistance, you're going to run into a lot of stop outs. You're going to have a lot of little losing trades. Some people don't care. Some people can handle that. Other people, they can't. They just, I've got stopped out. I'm not doing it next time I see a breakout, right? Well, let's match it to our personality, right? Let's match it to who we are as traders, and not try to fit the the square into the round peg, right? Or the other way around, however that saying goes. But hopefully this can give you some legitimate ways to start, especially if you don't have a place to start. The funny thing about rules for new traders in particular, they don't know what their rules should be, so they don't have rules, so that they don't get rules, right? I need a place to start. Okay, well, hey, this is who I think I am. Let's start here. Let's make 25 breakout trades using 25% of an ATR above that resistance level. Then let's go evaluate those 25 trades as a group, not just the ones that were awesome or the ones that were terrible. As a group, let's see how that was working out for me, right? Maybe I want to adjust it up or down a little bit. If I don't have a place to start, I'm not going to be able to do that. So while these are certainly not the only ways to go about it, maybe it can give you some ideas of how to approach your entry on these breaks. So we've identified our breakout, we've identified our resistance level. Now we've applied our individual rule of what clearly a break of resistance is, right? We all agree it's over 50, but some people are going to say it's 50.01. Some people are going to say it's 50.02, etc., right? So hopefully now we've been able to do that on our entries. Now let's talk a little bit about a stop loss placement when it comes to breakouts. The number one thing is we want to have our stop loss below the breakout channel, right? So we finally broke above 50. We need our stop loss below 50, right? Or above the resistance channel. We want to make sure that we're kind of working with the concept of old resistance becomes new support. Old support becomes new resistance, right? So when we broke above that $50 level of resistance that we keep using for our example here, we can now start to say, well, maybe that $50 that acted as resistance for so very long now acts as a support level. So we know that we want to have our stop loss below that. But again, how far below? And that's, again, going to really come down to the individual trader. We can kind of work with our ATRs, right? We can put a super tight stop loss of 10% of a daily ATR. That would be awful tight, but we could do it, right? I wouldn't, but that doesn't mean it can't be done. Or 50% of an ATR, or a full ATR, or a little bit more than an ATR. So we can kind of say, let's get our stop loss X amount below that resistance level for our bullish breakouts, and above that resistance level for our bearish breakdowns. So we can go with a percentage, or we can look to things on the chart. One of my favorite things is, and everybody here at Tackle Trading knows this about many of us, not just me, we want that 9 exponential moving average working for us. So if I'm playing a breakout, we finally break $50, ideally, I'm going to have a stop loss below that 9 EMA, wherever that might be, right? I always like to have the 9 EMA working for me personally, so we can use the 9 EMA or a different moving average if that's your thing. One of my favorite methodologies is looking to below the candlestick that led to the breakout. So the candlestick low before it broke out. I look at that as a very interesting place for a stop loss, simply because buyers came in at that low price, and enough of them came in at that low price to push us through that resistance and give us the breakout. I always pay attention to that. So the candlestick low that led to the breakout, one of my favorite things to do, can play kind of the same game with the swing high or the swing low that led to that as well. That's going to give us a lot more wiggle room on our stop loss, right? Definitely a great thing to have, but it's also going to kind of change our risk to reward a little bit. If applicable, sometimes there's going to be a really clear trend line that's working for us. The way I see it is, I want as much as I can justifiably get. I want to be below the 9 EMA. I want to be below the candlestick low that led to the breakout or high that led to the breakdown. Those things I can typically get. Those things are usually, I can grab both of them. If I can afford it, if risk to reward makes sense, I would love to get the swing that led to that break and a trend line if applicable. So the way I kind of see it, and I kind of use the one ATR in that regard as well, the more I have, the better, right? I want to have a rock solid level of support holding me up as I'm breaking, as I'm building that breakout trade, right? I want to have support working for me as much as I can get, but it can maybe be a good place to start. The way I kind of see it is I want to get the 9. I want the candlesticks that led to the break. I would like to be at least 1 ATR away, so 1 day of price action is not going to knock me out. Those are things I can get on a pretty regular basis. Not as much the swing, that I still am very open to it and would love to have it, but can't always afford it. But those are some things that we can look towards if we are trying to find a real clear way to play our stop losses. I prefer using the price action on the chart than a blind percentage of an ATR personally. But again, I know people that do, kind of use percentage of ATRs. Doesn't make it a bad methodology. It's just not my methodology. So now we got a little bit about our entries. We got a little bit about our stop losses. Now it's going to come down to setting our targets, right? And there's really, to me, there's 2 things you always want to ask yourself when you're setting a target on any trade. We're talking breakouts tonight, but this is true on any trade that I ever make. Does it make sense? If I'm buying that stock at a $50 breakout and I tell you my target's $100, I can target $100, right? But does that make sense? Certainly not for a swing trade, right? That's realistically, that's crazy talk, right? If the stock took 2 months to move from 40 to 50, probably shouldn't expect it to go to 100 on this breakout, right? So does it make sense? Am I being outlandish, or is it something that fits within my time frame and within the personality of the stock, right? And then does it make sense to me? Right. So maybe as I look at it, it broke 50 and there's no resistance at all. There's nothing in its way until $60. So I see this big $10 window from that $50 breakout to that $60 target that I want to take advantage of. That makes sense. Does that make sense to me? Well, if I'm planning on moving my stop loss up day to day, kind of below the previous day's low, every day it goes up, I move my stop loss to below that daily low and drag my stop loss up that way. Probably not going to make it to 60. I mean, hopefully I do, but that's probably not realistic. It probably isn't going straight up from 50 to 60, right? It's probably going to go up and down and work its way as it's trying to get to that level. So if my methodology as far as how I'm going to manage the trade doesn't line up with my target, well, that doesn't make sense to me then, right? I tend to be kind of a fairly, loose with my stop losses. So targeting $60 wouldn't be something that I would be fundamentally opposed to, because I tend to move my stop loss very slowly. And so for me, yeah, that does make sense. But that's just me. So always ask yourself those 2 questions when you're setting up your targets. It'll go a long, long way. As far as the actual, patterns themselves, the first thing you always want to do is look left of the chart. Where is some old price action? These, price remembers, right? And so if our $50 example had a lot of resistance at 55 back in the day, that should probably be a target zone for us, because there's a fair chance the stock's going to remember that it was an important price back in the day for it, right? So we're going to look to the left of the chart, look for previous levels of support or resistance, previous levels of price action that we saw movement off of, right? Always the first thing that I want to do. Assuming there's plenty of room there, right? There's not, I got plenty of room to that $60 level of resistance in our example. One thing that we can do is look to target just using ATRs, right? Hey, I'm going to target my first target. We here at Tackle Trading do 2 targeting with our trades, where T1 and T2 are first targets where we're going to do something, right? For me, oftentimes that means scale out of the trade. For you, that might mean move your stop loss to the break-even point, but we are going to do something. Maybe it means you just close, the trade altogether. So we got our first target and our second target. Well, one thing that if there's nothing in the way that we can do is kind of look at, well, 1 daily ATR is not a super tall ask, or 2 daily ATRs is not a super tall ask if there's not a lot of resistance or support in our way. If we kind of have room to work, that can be a way to go about trading, because sometimes we're going to be looking to the left of the chart and there's nothing. We're at all-time highs, right? And then we're just, we don't have any history to go off of. We're just going to have to go off of methodology and how these stocks tend to move. So using the ATR can be a great way to set some targets, particular T1, in my opinion. The next moving average, I'm a big moving average fan personally. And so if I broke out and I look and I say, well, there's nothing here, but there's this particular moving average, the 50 weekly moving average is at $58, boom, that becomes my target almost immediately, because that's how I tend to view these charts. So if there's a moving average that's kind of above you, if we're bullish or below if you're bearish. We can kind of look to that as a target zone. We could look towards our pay range, which is basically how much has the stock been moving, right? If it went from 40 to 50 and then, or from, 40 to 45 and 45 to 50, well, it's moving about $5 a swing, right? And so $5 becomes logical, right? Based off of how the stock has been behaving as a target range. You can learn more about pay range here at Tackle Trading, but just a quick, rundown of what that is. The range of the pre-break consolidation, one of my favorite ways to trade. So if we've got a stock that's been trading between 45 and 50 for 3 months, and there's no resistance beyond 50 that, that stands out to me, looking at the range, which in that case, 45 to 50 is $5, that should be a very achievable move. One of my favorite ways to target whenever it's a rangy type of a breakout is to look at the consolidation and use that as my target zone. We're also going to have our big psychological round numbers, right? $50, right? I was just using 50 as an example because I'm not going to use 48, right? 50 is a big round number. It stands out. 100, 200, 2,000 on gold, whatever it might be. Big round numbers oftentimes can and do play a part. So all of these things can be ways that we can target. When it comes to entry and stop, we can be pretty systematic, one size fits all, so to speak. But when it comes to setting our targets, every chart's going to be a little bit different, right? There's a lot of resistance at 54. We better pay attention to 54 when we buy our $50 breakout. If there's no resistance, if that's the all-time high, well, maybe I'm going to use the ATR methodology, so I'm going to have to be a little bit more flexible, right? Because I'm going to be looking to see natural windows that the stock can work within. That's going to be where we are on our targets. Now, when we're building our breakouts, we kind of hit all of these things, but I want to save you and me time when it comes to determining whether we want to, consider trading a breakout. And if I do things in the correct order, I'm going to eliminate a lot of things that I wouldn't trade anyway, right? And so I'm very, consistent in this is the order that you want to do it. Yeah, you need to do all these things, right? But we want to do these things first, because if we, get to number 3 and it's not working, then there's no reason to go to number 4, right? So first things first, we're going to identify it, right? We're going to identify the pattern. We're going to identify that resistance level. And this is our breakout. Let's rock and roll. If it gets above 50, right? Identify our entry point. Okay, well, we got the breakout at 50. Now let's go apply our rules. That puts you at 50.27. That puts me at 50.38. Going to, of course, use our own rules there. Okay, that works. That makes some sense. Let's see, what it's looking like from a stop perspective, right? What can I get with my stop loss? I know I got to be below that breakdown channel, but I want to get a clump of things, right? Can I get the 9 EMA? Can I get the candle that led to the breakout? Can I get the swing that led to the breakout? Can I get, some stuff, right? If it was maybe too big of a move, maybe you can't get any of those things other than just below the breakout channel. And well, not a really great place for a stop. Maybe it's a pass for me. Let's go look for something else, right? So, but assuming I've got a stop location that makes sense. Okay, I got a clean entry, logical stop. Now, where can I see this thing going? Where, looking to the left of the chart, going through my pay range, going through whatever my process is, where would I likely be targeting these things? I don't have to get it to the penny because I'm not making the trade yet, right? But what zones would I be working towards? Okay, now I got an idea of where I think this thing can work. Now let's take a look at the risk to reward ratio, right? Just like most traders, I follow you got to have at least 2 to 1 risk to reward ratio. If you're risking $1, you have to have reasonable expectations of getting 2 back, right? Very simply, 1 to 1 for T1, at least 1 to 1 for T1, and at least 2 to 1 for T2, right? If that risk to reward's not there, then what's the point, right? I'm going to pass and move on. But assuming it is, now we'll go into choose my strategy, right? Hey, I'll play the shares of the stock. Maybe I'm going to buy a call option. Maybe I'm going to do a bull call spread, right? Then I can go in, if everything's checked all the boxes. Now I can go through my strategy selection, right? Depending on, how I like to set these things up and what type of vehicles I like to trade with. And hey, that checked out, boom. Now I can go place the trade. If I walk through it in this order, if anything starts to look weird, I'm done, right? And I'm not wasting any more time than I absolutely needed to do so. Firmly believe that this is the way that you want to go about that. Some traders are going to use secondary indicators for additional confirmation. RSI is particularly popular where the RSI is now overbought, but MACD, volume, really any indicators that you feel comfortable and like to use can be used as additional confirmation for our breakouts. At the end of the day, and we're going to go look at a case study or two. At the end of the day, the true test of breakouts is being consistent with them. I've ran into it, and I've met so many people that have ran into it. They don't have clear rules for trading their breakouts. They can identify the breakouts. They can place a trade on the breakout, but sometimes they're aggressive because they're feeling good this morning. Sometimes they're conservative because they got burned on the last one, right? There's not a lot of rhyme or reason to how they're getting in, how they're managing, how they're taking profits on their breakouts. That leads to problems. That puts us in a weird spot where with any type of directional trade that we're going to take, we have to take the good with the bad, right? We win some, we lose some. That's the way it goes. That's part of the deal. Well, if I'm inconsistent, I put myself in that weird spot where I might just get the bad with the bad. That's not a good place to be. Believe me, we have to have consistent rules to how we're doing everything as traders. If I'm always getting aggressively, then yes, I'm going to run into some stop out issues, maybe more stop out issues than Maddie, who's a little bit more conservative in his entry methodology. But the times that it does work out for me, I'm doing a lot better than Matt on those trades, right? It can work. I have to be consistent. And that's why it's so important that we have these rules in place for ourselves. Otherwise, we're constantly chasing. Oh, this one didn't work out. I better be more conservative. Oh, I missed that one because I was too big of a wimp. Next time, I'm not going to be so wimpy. Weird stuff can happen. I've seen it time and time again, both for myself and other people. We got to be consistent. And that really is the true test of our breakouts. So we are going to now kind of shift gears and do a little bit of case study work here. Look at a couple of breakout candidates and kind of talk through them. And I'm going to start here tonight with Intel, because this is a really interesting one, in my opinion, at least. You've got a very clearly established level of support zone around that 25 level, very clear established level of resistance around that 31 level, highlighted it here. So hopefully it stands out to everybody. We've got this nice consistent trading range. It can stay in this range for a very, very long time, but sooner or later, maybe it's this time, maybe it's a year from now, but sooner or later, we are going to come out of this trading range, right? And that's going to be our breakout or our breakdown, either way, right? If it breaks down below the support, that's a breakdown. If it breaks above the resistance, that's a breakout. Now we're closer to the resistance level here today. So going to kind of be thinking about it from a breakout perspective, right? It's a breakout candidate. Again, it's only a breakout if it actually breaks that resistance level. We got a clear level of support, clear level of resistance. Now we can kind of come in. We even have the 200-day moving average kind of converging right to that level as well. Can kind of come in and say, okay, well, could I potentially prep my entry today? And the answer would be yes, right? Assuming I was using 10% on ATR, 20% on ATR, 50% of the ATR, whatever it is. If I wanted to close, the answer would be no. Right. But we'll kind of go with that for just a minute. So, okay, I can, and I'm not going to go super specific. I'm just going to guesstimate there. That's 10% of an ATR above that resistance level for our conversation here tonight. Well, stop loss. I don't know where it could go. Now, hey, I can make an assumption right now that if we break out from here, then this is the swing low that led to the breakout, right? I can make that assumption. That's all that it is. But that's a long, long ways away. Don't really have a good place for a stop loss, right? And so I've got what I believe is a very interesting candidate to trade, to play with here. Got a really nice breakout candidate, but that's all that it is. And it's going to kind of need to go into my bin, right? Of let's set an alert. Let's check them again tomorrow, because for all I know, what would be kind of nice to see in the days ahead is we kind of run our way up into that 200-day moving average, kind of get knocked back down a little bit, but we create a higher low, spend a little bit of time, and then we break that resistance level. Because then I can say, okay, well, this is starting to get interesting. If we do, I'm going to have to get rid of this guy because he keeps getting in my way, and now I'm just making a whole bunch of green dots. So now I can kind of say, okay, well, that is the low that led to the breakout, and get my stop loss X amount below that becomes very, very sensible, right? That's completely we'll have to see if that's how it plays out. It might just fire through tomorrow. It may not fire through for, a year and a half, but maybe I can see that type of development. The other thing that I can do is I can say, let's look to the left of the chart. And a lot of times when I look to the left of the chart, I go to a longer time frame, specifically the weekly, and say, okay, well, if we break this level of resistance, where can we go? Right? Where can we go? We know we're right there just above $35. I know I have the 50 weekly moving average, which for me is important. And that's right around that 32.50 level. So I look at this and say, okay, well, very logically, this is kind of the first stop. This is the first window that I can be working with, or maybe that's my secondary target. If I want to, look at it from that point of view, I can kind of look back and say, what about price, right? If we can get through that, maybe you don't care about the 50 weekly. Well, we can kind of say, well, where did we see some price before, right? We saw some price up here in this $35 zone, right? It was a support zone, tried to hold, it broke, it tested, it got pushed down, right? So we can kind of look to these windows and get an idea of what this trade might look like if and when we get there. Draw on your charts. These lines will be helpful to me. I might not 100% remember why I've got this line here. I probably will, but I'll know that it's important, and I can kind of, at least important to me. So if and when we're closer, when we're at 30.45, when we're at 30.52, when we're closing in on this breakout, I can take a closer look. So you're going to have that. You're going to have AQN, another little breakout candidate here. These guys actually did break resistance. Let's get rid of that box there. We had a clear level of resistance at $8, right? We kept bumping our head into that same zone over and over. We got to 801 on 802, I'm sorry, on Friday. So we got above resistance technically, maybe not enough for you, but we did get above that $8 resistance level. Now we even got a little bit of follow through candle, but because it hasn't made a tremendous move, right, we can start thinking, okay, well, could I get in above today's high? That'd be a little bit more conservative, but that's okay, right? I can't go back in time to Friday and buy it at 801 or whatever it might be. So I can say if I go above today's high, that might be something that I can get myself into. If I look at the candle that led to the breakout, that's of course Friday's low, right? That would be a good place for a stop loss in my opinion. That also gets me the 9 EMA and really technically kind of gives me the swing low that led to that as well. Okay, that's a sensible place for a stop loss. I could also tighten up and say, well, I at least want to have that 9 working for me. Is that below the breakout channel? Yes. Is it below the 9? Yes, right? So I'm going to have a couple of options here as far as that goes. Now I can kind of look to the left of the chart and say, well, there's, not a lot here, right? We got a lot of room to make up because they've been struggling for so long. So I'm going to have to go into the monthly chart and see if there's anything here. And I look at this and I say, okay, well, where's our history? There's none of my moving averages. We can kind of see we're right at that history right now. If we can kind of get through that, we kind of get into this mess right about here. Remember, this is a monthly chart, right about that $9 level, right? So that's about a dollar. We're just a little bit over 8 into about that $9. Maybe I'm looking at that 9 monthly EMA. It's looking at me. I know that where that's going. Now I can say, okay, well, what if that is a target for me? What if that is a target for me? Can this work, right? Can this work? So I'm going to go just to where I drew that line here. Again, I'd be a little bit more specific, but for time purposes, we'll just kind of guesstimate there. Can I get the swing low? I'm risking $1 to get $1.73. That's not going to work. Can I get the 9 EMA? Can I get below that 9 EMA? I'm risking $1 to get $2.24. That could work, right? And so now I can say, hey, am I comfortable? Do I want to work with this? It's okay if I do. It's okay if I don't. It's just an example, right, for tonight. But hopefully walking through it kind of gave you a little bit of a process. One more, and I'll let you get out of here. And this is an interesting one. This is Cinemark, right? This is somebody who's kind of gone into this range, has a lot going on here, right? Got a lot of history at this $14 level. Support, 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 breakdown, resistance, resistance. A lot of history at in this $14 range, right? I don't know the future, but I would imagine it remembers that, right? And I can kind of say, okay, well, I need to get above that, right? I'll go find out exactly what that number is and apply my rule to it. I'm not going to do that here tonight, but again, guesstimate there. We'll just put it right there. want to have, the candle that led to the breakout, right? That today I could make the assumption that it's today's low. I want to get the 90 MA. I can come down below that. Again, probably isn't going to break tomorrow, so I'll probably have another candle to work with. I can look to the left of the chart and I can say, okay, well, where have we been? Where have we been before? Well, these guys do have a little history here about 1650, right? We had this, this ding right here, came back down, a little bit of a zone, not a tremendous amount, but a little bit of history in there. That might be a target zone, whether T1 or T2, right? I look back even further and say the next real multiple test was kind of up here, that 1950 level, right? So I identify where my windows are, and I can kind of think, how would that look? I can look at the trade again. This can't be a fully prepped trade tonight because, I don't know, I might have a new stop loss option tomorrow, but I can get an idea of, this would fit into my 2-to-1 or better risk to reward ratio rule. It's at 2.2. By the time I actually do the right numbers, it might be a little bit more or less than that, but it gives me a really good idea of what that's going to look for. I also know that 90 MA is going to go up a little bit more, particularly if this thing does break that resistance level. As we wrap up here tonight, ladies and gentlemen, first off, I want to thank you so much for your time. Hopefully you learned something about breakouts, whether it's stop loss ideas, entry ideas, the concept as a whole. Hopefully you learned a little bit about breakouts this evening. Of course, we're always talking trading over at Tackle Trading, whether it's in our shows, in our YouTube stuff, over on Discord. Always a lot of great conversation about trading with this awesome community of traders here. If you are not a member of Team Tackle and would like to give us a shot, as Coach Matt brought up earlier, we have a standing offer, free 15-day trial to see what it's all about, see if it's a good fit. Send us an email, team@Tackle Trading. We can get you set up. You can head over to the store tab at tackletrading.com, get you set up as well, see if it's a good fit. Ladies and gentlemen, that'll do it for tonight. But again, you can always find me over in the Tackle Trading Discord. If you need anything, always can find me. Always happy to help. If you want me to, I'll be happy to throw that little presentation I threw together in the Discord as well, so you can have access to that. Just ask for it over there in the Discord channel. I'll be happy to share it with you if you do need it. Most of all, thank you so much for your time this evening. Hope you learned something. I'll look forward to seeing you very, very soon, one way or the other. But until then, have a wonderful night, team.